public blockchains like Solana are going to be the infrastructure that powers everything from internet capital markets to global payments. I think it's definitely stablecoin summer on Solana. We got to take it brick by brick, and we'll come back for the yield-bearing stablecoins at some point. You could immediately snap your fingers and have safer assets in your wallet. You would do so, potentially aggravate bank runs.
GM, and welcome back to SolanaFloor. The Solana Policy Institute has been in the thick of regulatory action in recent weeks, helping to advance the Genius Act in the US Senate and collaborating with veteran Solana teams like Phantom and Orca to pitch progressive RWA policy to the SEC. Today, I'm joined by SPI CEO Miller Whitehouse-Levine to find out about the Genius Act's next steps and to learn more about how SPI's proposed RWA framework, Project Open, could help bring billions of dollars worth of TradFi assets on-chain in a compliant way. Miller, GM, and welcome to SolanaFloor.
Ben GM, thank you for having me.
Are you able to give me a quick overview of what the Solana Policy Institute does and what your role is there? What are the objectives of the organization?
Of course. So we're a relatively new organization. I've put together an absolutely A-list team to do primarily two things. Number one is to educate policymakers, explain to policymakers why public blockchains like Solana are going to be the infrastructure that powers everything from internet capital markets to global payments, relevant to the policy issues we'll be talking about later. And second, ensuring that the innovators building that future, have the clear rules of the road they need to do so confidently and with legal and regulatory certainty. So those are broadly our objectives. We're about 3-4 months in, and it's been very busy. So looking forward to today's conversation.
Fantastic. It's been a pretty wild first 3 months. I've seen SPI everywhere. You know, you were huge presence at Accelerate, huge presence in the US Senate already, and that's kind of where I wanted to start. So, how involved was the Solana Policy Institute in getting the Genius Act across the line in the US Senate?
Well, credit, of course, goes totally to the senators, including Senator Haggerty, who co-sponsored the bill and introduced it. But we've certainly been active because I think that stablecoin legislation broadly unlocks, legitimizes the use of public blockchains for regulated activities in a really fundamental way, a totally fundamental building block to build the world that we're all here to build. So we've been very supportive of the Genius Act and are hoping to see the House pass it so that the president can sign it into law expeditiously.
Okay, so you mentioned excited to see the House pass that. Now, it's already passed the Senate, and that's kind of been a big bullish catalyst, let's say. You know, there's good headlines, people are excited about it, but the Senate Act, sorry, the Genius Act is yet to pass into law. So where are we now in the process, and what can we expect to happen next?
So you've got three, major requirements there: the House, the Senate, and the president. The Senate, for the first time a few weeks ago, passed the Genius Act. And I say the first time, it's the first time the Senate has passed any comprehensive crypto-related regulatory framework ever. So it's extraordinarily exciting. I think not only is it a watershed moment in DC for crypto policy, I think it speaks to what is going to be important for our long-term objectives, which is keeping crypto as nonpartisan as possible. The Genius Act passed via a bipartisan supermajority, and that's as good as it gets. So was extremely, extremely encouraging, and now it is over to the House because the Genius Act originated in the Senate. The Senate has voted on it. The House can now consider it, after which it could go to the president's desk. If they make changes, it would go back to the Senate. So too soon to tell exactly how Congress is going to decide to move forward, but we expect them to do so quickly, so it should be an exciting summer.
I like that you touched on summer there because we've been talking a lot about Solana summer, stablecoin summer, altcoin season. What does the Genius Act's passing mean for Solana and specifically for Solana's on-chain economy?
I think it's definitely stablecoin summer on Solana. If the Genius Act passes, perhaps crypto policy will name a season for the first time on CT. But yeah, I do think already we're seeing an immense amount of interest in stablecoin usage. They're clearly filling not only a demand for US dollars globally that was not being filled by another technology or asset, and on the other hand, an immense private sector investor appetite to invest in these issuers. So I think that the market reaction to Genius developments is only more evidence that it was high time for Congress to move on stablecoin legislation, and I hope they do so.
Right. And so forgive me, but my knowledge of the average kind of voter turnout and voter win rates in the Senate is perhaps not perfect, but from what I can see in the Senate, the Genius Act had a 68-30 vote. So a bit of a landslide, I would say. But obviously not everyone's on board with that. So Senators Dick Durbin and Peter Welch have spoken out against the Genius Act, and they claim it allows the president and his family to continue owning, issuing, and profiting off stablecoins. Is that an accurate assessment in your view? How would you respond to those claims?
Well, I would start by completely agreeing with your description of 68 votes in favor of a bill in the Senate being a landslide. The last legislation to do that related to financial services was back in 2008, 2009, just after the financial crisis, and Dodd-Frank didn't pass with as many votes. So I think it's just the end all be all is that getting 68 votes on anything is unheard of in US politics at the moment. And we shouldn't discount that just because there is a super minority of representatives and senators who will forever be crypto critics. With respect to Senator Durbin's specific comments, I think that Leader Hakeem Jeffries in the House, put it well in that he thinks it is right to differentiate between regulating crypto market participants, custodial stablecoin issuers, and consider that a separate conversation than the president's potential business dealings conflicting with that framework. I think that it is long term suboptimal to kick the can down the road on creating certainty for businesses operating in this space, for consumers using these products, for an issue that is not going to be resolved in any bill related to crypto. So I hope to see Congress continue to differentiate between these two issues, or at least a supermajority of them doing so as they continue considering crypto legislation this Congress.
Okay, another contrarian take that kind of came out through all of this was that there's an argument that amending interest generating stablecoin practices out of the Genius Act is kind of a ploy from legacy banks to just stifle DeFi innovation and declaw competition from emerging markets. With inflation devaluing the US dollar at a pretty alarming rate, how can you assure stablecoin users and holders that they're not getting a raw deal through this Genius Act?
Yeah, I think that a prohibition on yield-bearing stablecoins shouldn't be in the bill, and we advocated against it. The financial services industry, the banking industry, essentially argued that allowing consumers easy access to an interest-bearing asset like a dollar stablecoin uh, threatened the viability of fractional reserve banking broadly, in that it would potentially aggravate bank runs. If you have, for example, deposit at a bank that is failing, and you could immediately snap your fingers and have safer assets in your wallet, you would do so. That would be rational. But it also means you have an instantaneous bank run. And this coming off the heels of Silicon Valley Bank and Signature in 2023. Folks are very skittish about that. I will say that I think that one of the interesting things about this is, to the extent one is seeking yield-bearing on-chain assets, one can always buy an on-chain treasury. For example, I believe in Wyoming, a bank has trialed tokenized deposits that are yield-bearing and would give direct access to that on-chain. But Finn, to your broader point, I am certainly of the view that we are on a 100-year journey here. Crypto is trying to do something fundamentally revolutionary in many, many different foundational functions of our society and economy, and that is going to be a long run. So we got to take it brick by brick, and we'll come back for the yield-bearing stablecoins at some point.
It's a battle of attrition. So following the meteoric success of Circle's recent IPO and market debut, do you think we can expect to see more stablecoin issuers and stablecoin adjacent businesses going public in the US?
I mean, I certainly would be if I had one. I wish I had a stablecoin related business at the moment. I have no idea, but I certainly would expect folks. I mean, I think all of us have been totally stunned by the public market's reactions to Circle's IPO. So I imagine that has folks thinking.
We're going to switch gears a wee bit. So last week, SPI, Orca, Phantom, and Superstate joined forces to formally submit a framework concerning RWAs to the SEC. What are some of the key motivations behind Project Open? Because a lot of the terminology that we've seen, a lot of the reporting on it has been quite vague so far. Is it a question of just protecting validators and decentralized exchanges from legal liability? Or is it more about streamlining RWA adoption to get these assets on-chain as quickly as possible?
In a few words, it is about making the legal world safe for internet capital markets. And the objective of Project Open broadly is to enable direct securities-based fundraising for companies on-chain and secondary trading of equity securities on-chain. So that is the vision, at least when it comes to the SEC and our work on Project Open there. But broadly, the concept refers to what are the key pieces of the global financial system that should be on-chain, and how do we get them on there as quickly as possible.
Okay, and so as far as Project Open is concerned, what happens next? Is that going to be not drafted up, is that going to be sent over to the Senate and everyone's going to deliberate and amend and then vote on it? Is it going to be a similar process to Genius? How do things look from here?
Nope. So Project Open at the SEC will solely be addressed at the SEC. So by the 5 commissioners of the SEC who will vote on it. Currently, Commissioner Hester Peirce leads the crypto task force. Chair Atkins is the recently confirmed new chair of the agency. Both have made numerous public statements supportive of on-chain equities markets. And so the SEC appears highly motivated to get this done. We and others in industry are as well. And so I think interests are aligned, and we might just be able to catch lightning in a bottle.
So you mentioned interests are aligned. Hester Peirce is on the team. It all looks like it should be pretty smooth sailing, but obviously nothing ever is. So what are some of the obstacles you expect you might come across when you're trying to get this framework pushed through?
Like I said a few minutes ago, crypto is revolutionary. Elimination of financial intermediaries, as far as this conversation is concerned, means the elimination of financial intermediaries. And those folks have a voice, and we should expect to be hearing from them, and already are. So certainly, to the extent that Project Open would eliminate any legacy intermediaries bread, we'll certainly be hearing from them, and the SEC will be as well. So it certainly won't be completely smooth sailing. There's momentum and potential, but they're going to need political cover, support from folks in industry to be able to drive it forward, and we're going to help them do it.
So, courtesy of the previous administration, our good friend Gary Gensler, the US is generally speaking pretty far behind other nations like the United Arab Emirates and even Kazakhstan on crypto regulation. How do you propose that the US can kind of bridge that gap and catch up and close that distance to become a world leader in crypto regulation?
The US is certainly trying to, and is, I think, moving as quickly as possible, certainly this year, to make that happen. So I think that a game of catch up is occurring here, and I do think that durable wins are the kind that we need to have the certainty over decades that I think will be difficult to find anywhere else. Long term, I'm most bullish on crypto's future in the United States, because I think that ultimately many of the rights that U.S. citizens are guaranteed in the Bill of Rights align with crypto's ideals: digital property, freedom of speech. And I think that is a unique partnership or alignment that long term will mean that crypto will find its home in the United States. I obviously could be wrong. I hope I end up being right, but I think long term the US will be home base.
So a lot of Solana's user base is retail users. It's, people in local shops, it's people, from all walks of life. How does Project Open benefit these people and this chapter of Solana users?
I think of them as being the primary ultimate beneficiaries for two simple reasons. What Project Open can accomplish and what internet capital markets can accomplish is reducing barriers to capital and reducing barriers to investing. Right now, to access, for example, private investment opportunities, you literally have to be rich. There's an accredited investor rule that is an income and asset threshold that controls who could even have access to the private markets in the United States. Of course, no company has IPO'd successfully in the last several years until Circle knocked it out of the park a couple of weeks ago. But it's been a long losing streak for public markets, which means those who are not starting out in their investing journey with resources and a large income. On the other side of the equation, raising capital is a very expensive business. And the IPO markets and the drop in public fundraising in the United States is evidence of that at the grandest scale. But, raising money on Kickstarter, all of these things have filled vacuums over the past decade. GoFundMe being another example, although perhaps not capital raising in the investment sense, but still totally applicable. The more that available capital and investors can meet those needing to raise capital, the lower it'll cost to do so. And lowering the cost of credit and expanding access to credit is really one of the fundamental pillars of wealth creation over the long term, not only on an individual basis, but also societal basis. So more access to capital, more access to investment opportunities is good for everyone. I think it's particularly good for those folks today who can't even access those opportunities.
An excellent answer. Miller, thank you so much for coming on. It's been fantastic learning a bit more about what happens behind the scene, away from the fanfare. So keep fighting the good fight in DC, and looking forward to next time we catch up.
Ben, thank you for your time. My pleasure.